What's going on, everybody? It's Blake here at Trade Tracer. Welcome to the weekend market report. In this video, I'm going to give you updates as to how I am trading this market and also what you can be expecting. As always, none of this is financial advice. Always trade and invest at your own risk. Let's go ahead and get started here. I have the SPY pulled up here on a daily time frame. And if you guys remember, I pointed out that these highs came without MACD at new highs. So we put in new highs without MACD, indicating some bearish divergence. I said that that didn't matter until we broke trend. Price was going to remain the primary indicator, and as price was making new highs, even though it was doing it without MACD, we had to respect price. Well, now we have broken trend on the S&P 500 after putting in new highs without MACD. That is concerning. So that does concern me. Am I calling the top? Absolutely not. People ask me, what do I look for in a top? I don't look for a top. I look for price structure, and I get more defensive, and I play a little bit heavier defense when price structure tells me that I need to. So right now, price structure is telling us that there is risk in this market. We are moving below some very important key moving averages and anchored volume weighted average prices that we'll go over here in a minute. But first off, the most important thing that is happening on this chart with the S&P is that we're breaking below the cloud. Now, we closed below this cloud, and the cloud, the bottom of this, is the 50-day simple moving average. So we broke below a very important key level with MACD confirming that momentum moving lower. Now, one of the things that I want to bring up here is this volume weighted average price from the November 9th. I believe this was the vaccine news. We got some good vaccine news, gapped up incredibly, and then sold off pretty much all day. But that was a very important turning point in the market because it gave the market a lot of optimism and a lot of hope. And this level, this blue line here is the anchored volume weighted average price. So the average shares, the average price of where shares have traded hands. So you can see this has acted as support previously in the past. And the question is, will it act as support one more time? We are at a very important inflection price level on the market. I cannot stress that enough. This area between this VWAP and this 50-day moving average, this range right here is extremely, extremely important. It is a very highly watched area of price, and it's going to give us one of two signals. Either we bounce and move up higher, or from this level, this is the start of a bigger breakdown. Okay, so those are the two scenarios right now, and we closed in downtrend. Do I know which is going to happen? No, I don't, but that doesn't matter because we're following price, and right now price is bearish, and I'm playing defense until price can close back above this cloud, and then I'll go ahead and start to add long market exposure again, and maybe I'll front run it a little bit. But as of now, this is bearish price structure, and I'm playing very heavy defense. So keep a very close level on Friday's low. I think below Friday's low, we see some more downside and could potentially start to fill some of these gaps down here. Now, it's been a while since I've said that, but that's the reality of price right now. So we're just going to have to respect price. So the other volume weighted average price I wanted to point out was the year to date volume weighted average price, which is this black line. Now, the reason that this year to date average volume weighted by price is important is because it's a level that fund managers look to buy on. Fund managers want to just be average. They want to get the average share price. And so this is a moving average that fund managers are always monitoring and always watching because they want to be able to buy as close to average as possible. Pretty pathetic that they just want to be average, right? But that's how the financial industry works. I used to work in that industry. So this is a very important moving average, and we actually broke below that and had price weakness confirmation on the candle that broke that. Price weakness confirmation be below Thursday or Wednesday's lows. We got that on Friday and closed just below that 50-day moving average and at a very important volume weighted average price. So we're at a very important inflection point. Let's go ahead and pull this up on a little faster time frame to see what this is looking like on the faster time frames. You can see that this year to date volume weighted average price had acted as support, and then we finally gapped below it on Friday, tried to make an attempt to run back up, got rejected, and just sold off pretty much the rest of the day. So on the 30-minute time frame, until we can get back above, I'd say the 378 level on the S&P. So 378 is going to be a key important level that I'm watching on the S&P. That'd be back above this VWAP and also back above the 30-minute 50-day moving average, or 50, candle minute moving average. That 378 level. So keep a close eye on that 378 level. Going to be watching that closely this week. So that's all that I'm going to be talking about. I just wanted to recap the market. We'll go ahead and do some tech. The NASDAQ is also showing some weakness. All right. Once again, broke below the year-to-date volume-weighted average by price with a fresh MACD bearish crossover. So that's not very bullish at all. And then the Dow actually is the biggest laggard. You can see we actually broke below that vaccine news moving average, and now we're looking to come back and test a previous breakout level right around the 296 level. If we break below this 296, let's zoom out so you guys can see what this is. But this 296 is basically this previous breakout right here. So from these highs that we put in back in February, if we came back and tested that and held, that'd be very bullish. But if we break it and break below, we could start to maybe fill this gap here in this 288 to 284 range on the Dow Jones ETF DIA. And then lastly, IWM. IWM has been the leader. However, something like this, I do expect to maybe lead the way down since it led the way up. So this is actually going to be on our playbook for Monday. Just to wrap up real quick, we are in a very important level in the market. This is a key inflection point. We either bounce here and rally maybe back up to this 377 level on the SPY, or we confirm price weakness and break below, and this is just the start of a bigger bear trend. So that's all I have for you guys today. Hope you liked it. Make sure you hit the like and subscribe. See you on Monday.